Shares in Asia were mixed as investors awaited the release of U.S. consumer inflation data. Mainland Chinese stocks closed mixed as well. Hong Kong's Hang Seng Index gained 0.1% as of its final hour of trading. European stocks were cautious after a deluge of corporate earnings. The U.S. CPI report is expected to show headline inflation for January at the highest level since 1982. Headline inflation, including food and energy costs, is expected to rise to 7.2% year over year. To talk to us about how all of these global dynamics are impacting our local markets, we are joined by Connette van Zyl, who is an investment analyst at ABSA Asset Management. Connette, thank you so much for your time. I mean, given the sort of mixed performance when you look at the Asian markets and I suppose a cautious start in Europe, how is our local markets dissecting all of this news ahead of the US CPI?
Okay, hello Nastasia and hello everybody. Right now as we're sitting here, our market is really flat as we're speaking, and that's after 4 days of ending in the green. And if you look at it, the Aussie is actually back at all-time highs, and we've seen over the last couple of weeks a real outperformance by our market compared to the international markets. So to give you some perspective, the S&P has actually been down 4% year to date. The Nasdaq has been down 9% year to date. So why are we seeing these divergent trends? So let's look at our market here first in South Africa. Our SA Inc. focused companies are actually holding up very well. With our local economy still recovering from the lows of COVID, this growth is coming through and it is benefiting these companies. Our inflation here locally is also on an upward trend, similar to the US, but it does seem that it is more controlled and more mild, especially compared to other parts of the world. The rand is holding up well. As we're sitting here, we are below 15 rand 15 to the dollar, which should also help control inflation locally here in South Africa.
Right.
Yes, we are also seeing interest rates coming up in South Africa, but we believe that these have been well communicated to the market and that they will be gradual. So
let's talk about, I just want to get in there. Let's talk US CPI that investors are looking forward to. Expectations is that it will likely be 7.2%. What dilemma does it cause, I suppose, for the Fed should that figure come in lower than 7.2%?
Yeah, so I was going to talk about that from an international market point of view. Now, I think that as you have mentioned, Nastasia, the CPI print that came out in December at 7% was the highest number that we have seen in more than 2 decades in the US. And then obviously on the back of this, the Fed has got to react. I mean, the US economy is strong, and we are at low unemployment levels. So they have to act to bring inflation under control. So they have been quite hawkish, and we've seen some hawkish tones coming out of them since December already, where they said that they are going to bring tapering forward. They also said that they are going to start hiking interest rates this year in 2022 already. And this is quite different to what we saw, maybe 6 months ago. So as we stand at the moment, if inflation comes in, in line with expectations, the market is already pricing in 5 interest rate hikes in the US for 2022. Some forecasts are actually putting the first rate hike as soon as March this year, which is in a little bit more than a month's time.
Yeah.
And there are even some commentators talking about a 50 basis points rate hike in the US, which is quite unheard of, considering how low the interest rates are. So I think, if we are seeing a continued increase in upward pressure on inflation, especially if it continues to come up above expectations, we might see even a more hawkish stance from the Fed and even a more aggressive tightening from them.
Right. So let's bring things locally. Earlier this morning, we did see some, SENS reports. So we had numbers out of ArcelorMittal and Italtal. Is there any other company news that caught your attention?
No, but I do want to talk a little bit about what else is supporting our market locally here compared to international markets like the States. So obviously when you're seeing these interest rate hikes in the US, you're seeing US bond yields picking up. And your high growth stocks, your tech stocks in particular, which are big constituents of the S&P 500 and the NASDAQ, those are very, very sensitive to those sort of long bond yield increases. So that's different in their market compared to ours. The other thing that I want to talk about is the strength of our resource sector locally here in South Africa. And that's really been, on a continuation of very high commodity prices. And this is even after a very, very strong fourth quarter last year for the resource sector. So, some examples, Brent crude oil is still above $90. That is the highest oil price that we have seen in 5 years. Platinum is recovering off very low levels in December, but it is definitely on an upward trajectory again. And the reason for this is, the tensions between Russia and the Ukraine. Russia is one of the largest exporters of commodity and energy, sources globally. So that is going to continue to push commodity prices up, as well as continued supply constraints globally because of COVID. And China's restrictive stance on COVID. So these high commodity prices are keeping our resource sectors elevated, which is also helping our market. That also plays into the inflation story globally and in the US with higher commodity prices and higher energy prices fueling those inflation numbers further.
All right, Connette, let's leave it there. Thank you so much for your time. That is Connette Van Sail, an investment analyst at ABSA Asset Management.